An auditor must design and implement audit responses to address the risk of material misstatement that are identified and assessed according to auditing standard number 13. An auditing appropriate assignments of significant engagement responsibilities, due professional care in the performance of work, it provide the extent of supervision that is appropriate for the circumstances in the audit, and incorporate elements of unpredictability in the selection of audit procedures to be performed from year to year. So like I said, you have to see what's going on with the company from year to year. Just because it was one type of audit the year before doesn't mean that the same one will apply again this year. You have to do this procedure every year because nothing is the same in business. It's always dynamic. It's always changing. And that it may even change during the audit, which you'll observe also. You have to evaluate the company's selection and application of significant accounting principles, like whether they're really following up to date with the rules, the regulations. An auditor should determine whether it's necessary to make pervasive changes to the nature, timing, or extent of the audit to adequately address assessed risks of material misstatement. So again, going back to the reassessment, you're reassessing every year. Even your regular client you've had for 20 years, you can't walk in and assume that they're going to get the same risk assessment year after year after year, because businesses do change. And you have to exercise professional skepticism, and you have to modify your planned audit procedure to obtain more reliable evidence sometimes, or you have to obtain sufficient appropriate evidence to corroborate management's explanations or representations. So it goes back to being skeptical and exercising professional judgment and being independent. No matter if they've been your client for 20 years, companies change and business change and industries change, and this all has to be in your mind as you walk into a new audit assignment every year. And you must design and perform audit procedures in a manner that addresses the assessed risk of material misstatement for each relevant assertion of each significant account and disclosure. It's a pretty thorough process. All the assertions have to be tested for every account, basically, that matters to the company and disclosed. And you have to obtain more persuasive audit evidence the higher the auditor's assessment of risk. So you have to collect more evidence. And you have to take into account the types of potential misstatements that could result from identified risks and the likelihood and magnitude of potential misstatement. And then you have to design the testing controls to accomplish the objectives of both financial statement and also testing the internal controls audits simultaneously. So you're testing for both these issues at the same time. You're verifying the financial statements and within a certain level of material misstatement, and you also have to verify the internal controls. They're very similar in audit procedures, but the internal controls is part of the material risk assessment, but they have to be conducted simultaneously.